Hello and welcome to another update video about gold. Yeah, gold had quite a sharp pullback in the last week. So we want to talk about a few options here on the chart. I want to show you basically a couple of wave counts. Before we start with that though, and you see here the entire move of the October 2022 lows. My take is still that this is quite a bullish structure. I mean, we've broken the highs, the 2023 highs. We've basically broken all the highs. Just if we go to the monthly chart, you see that, So gold broke to new highs. I mean, this is GC, gold futures, but still gold is in quite a bullish structure. And throughout 2020, let me just 1 second, here. Throughout 2022, 2023, I've been fairly bullish on gold. And it's good to see that we break to these new highs. However, as I mentioned many times, the rallies in the metals market, in the gold market, they can be very aggressive. And the pullbacks or corrections can be extremely boring and long. As, for example, here, price action between May and October this year has proven, And also here now, it could be that we are entering another extended correction. Why? Because the rallies in the gold market, they can be so extremely quickly. And that means we have to expect a strong or at least long pullback and correction. It seems like the market goes that way due to the sharp pullback that we've seen. I still don't see this as a bearish structure. I actually see this as quite a bullish structure. There are, of course, different ways how this can be counted. But remember, I think it was like 2 or 3 videos ago, I warned you that the move up to new all-time highs and towards $2,500 could be extremely choppy if we have to adopt the wave count of a diagonal structure. That is also the first wave count I would like to show you. So basically of the October 22 lows, we can see this as an ABC structure, the wave 1. It actually counts quite well as a 3-wave move. You can count it as 5 waves, which is why an impulsive move up is also possible. Doesn't make a great difference though, if I see it as impulsive or a diagonal. It just means if I have the option of a diagonal, I know that I have to expect more frequent setbacks. It will be a rocky road. Might need to give the trades a bit more space, things like that. And that is also what I currently follow, but also warning, and I mentioned that as well, if we are in a diagonal, we have to prepare ourselves for frequent wave count changes, at least not necessarily with regards to the bigger picture and the main assumption and thesis and trend, but more with regards to the microstructure. So just prepare yourself for that mentally as well. Prepare yourselves mentally for frequent changes in wave structure until a more impulsive structure becomes more clear. And also prepare yourselves for more frequent setbacks and a rocky road and long corrections. So the assumption would be wave 2 bottomed in October, and we're now moving up in an A wave, B wave, C wave in wave 3. If this is an ABC as well, it counts quite nicely as a 3-wave move. Then this would now be the B wave. I think it still isn't finished. And then we'll get a C wave up in 5 waves. Then a wave 4 and a wave 5. So that's how I would probably navigate this with the price data I have primarily. In an alternative wave count, I would see this here as an impulse. Then this would be a 1, 2, 3, 4, 5, and so on. And this would be, and you can count that as a 5-wave move as well. It's just not, it doesn't count that well as a 5-wave move. But that will, it doesn't make a great difference. This is really just the academic stuff around it. Because I can count this, for example, as a bullish 1-2, 1-2 setup. And then this would mean next week also we break out directly. But I want to rather allow for a deeper pullback. So I could also see all of this as a wave 1 and a deeper wave 2. But I'd rather be safe and say, okay, we're in a diagonal that allows for deeper pullbacks. Of course, there's also an invalidation point. And the invalidation point will be the 1824 level, which is the October low. So that's really when we have to say, okay, maybe something more bearish is playing out. But until then, the trend is pretty much up, and the structure I find is quite bullish as we're heading into 2024, at least from what I see right now. The chart can always change its mind. especially if we're not dealing with clearly impulsive structures, as I explained. So if we go to the 4-hour chart, then you can see that primarily I see this as an ABC structure. Yeah. And then this means we can define a support area for the B wave. Again, B waves can be difficult, but we can typically the standard support zone would be between the 50% retracement level and the 78.6. Now I often add the 38.2 fib level as well. Just for info, it would be now in that area anyway. But this is really like the first support, 2027. Doesn't clearly look as if gold has completed this pullback yet. So if I gave you a microstructure for this B wave pullback, obviously it would ideally be a clear ABC structure. Yeah, and if we... So this for me would be an A wave, possibly still ongoing, then a B wave and a C wave. If, however, the next rally is impulsive, then I will not expect this to be a B wave anymore. At the moment, this is sort of my view, that I'd be watching for a B wave rally, okay? Which again would be an ABC structure, but I have no indication that wave A is finished. So maybe from 1988, that's the next support, we could look at a B wave rally, and then another move down in wave C. So again, that can take many more weeks. However, if the move up is impulsive instead of corrective, then we're likely already in the C wave. Either way, you know, the next impulse to the upside should indicate that we are continuing in this third wave in a rally. Okay, any corrective move up is likely just to be seen as this B wave corrective rally within a larger B wave. And then 1894 is support. That's just, you know, these are the key support levels, you know, 1988, 1950, 1894. Doesn't mean if we break it, the third wave is invalidated. It would just be deeper than ideal, just means more caution then, but certainly invalidation point is at 1824. So that's sort of how I see currently the gold market. Obviously, as I said, you know, you can count this as a 1-2 setup. And then, however, the invalidation point for that is at 1937. That is covered, though, by our larger support area, so I don't specifically call that pattern out. It would also mean that it's a super bullish structure, but the price would need to turn around basically instantly. Otherwise, we have this invalidation. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our stocks and S&P 500 service. The link is in the description. Thanks a lot for watching. Bye-bye.